Last week, GameStop filed to issue 75 million new shares for roughly $3 billion. In the statement issuing new shares, management even said since 2021, the market price of our common stock has seen extreme price fluctuations that do not appear to be based on the underlying fundamentals of our business, which is basically the GameStop executive team acknowledging the meme stock phenomenon is based on nothing real and they think the company is highly overvalued, which means they are doing what good management should do: issue new shares. If you owned a company in a dying industry that was losing money and on course to go out of business, but one day you woke up and investors were willing to invest billions of dollars for no reason, why would you not take the money and try to turn the company around? In fact, it's probably your fiduciary responsibility to existing shareholders to raise the money to attempt to turn the business around, or at least strengthen the balance sheet to fortify the company against future losses. The problem is the moment GameStop issued this prospectus, the share price dropped over 50% from its after hours all-time high. Why? Well, when you create more shares in this scenario where investors are holding GME for no fundamental reason and management has no good immediate use of the $3 billion, then as more GME share supply hits the market, it likely doesn't find buyers at the current market price. So the stock price falls as existing shareholders get diluted. But again, while that may be bad in the short term for GameStop, it's a smart medium-term move to raise money and fortify the balance sheet. But companies that perform well over time need more than just a strong balance sheet. They need growth. If this was Nvidia, they could reinvest this money back into their operating business and likely continue to see more explosive growth, and the issuance of shares might actually be accretive to shareholders in the short term and the medium term. But GameStop has no good use of the money. They shouldn't build out more stores and invest in a dying industry, brick and mortar video game sales. But they do desperately need to find growth somewhere, otherwise they will continue dying. My suggestion would be buy and hold Bitcoin. Adopt a corporate Bitcoin strategy like MicroStrategy has and like Selmer Scientific has. This would enable GameStop to both fortify their balance sheet and create potential for massive growth. With $3 billion, they could buy 42,000 Bitcoins. As I've talked about before, if Bitcoin just reaches gold parity, this $3 billion would become $30 billion, and GameStop short sellers would be forced to buy GME at much higher prices, enabling management to potentially issue billions of dollars worth of more shares to buy even more Bitcoin. Ultimately, this strategy would enable GameStop to start focusing on increasing their Bitcoin per share, fortify their balance sheet, and trim down the operating business to a profitable state where they can begin funneling future free cash flows into Bitcoin as well. Will this happen? I don't know. Should it happen? Probably. If the GameStop management team happens to see this, feel free to DM me to talk about Bitcoin or enterprise Bitcoin custody. Thanks for watching, everyone, and see you next time.